Welcome back, guys, to yet another crypto market update. And also today, we're going to be getting into crypto tips and tricks, more so mentally, and a ton of other advice regarding crypto and the markets, just to kind of fill in some space for the time being, since there's a lot of just boring, talk going on, as well as just boring price action. And so, yeah, with the price action, really nothing's changed since the last video. And to be honest, videos before that, we're still trudging along with Bitcoin being around that $94,000, $95,000 level, which honestly is not bad. I mean, we're still above $90,000. But yes, we are in a boring period. And I'm seeing a lot of people get out of the markets right now due to that being a boring period. Like I said, summer, I've seen that as well. We have Elon Musk and Trump. More so the MAGA supporters going back and forth on specific political issues, which it definitely is a factor that could impact things as well. Long term, though, we'll have to see. Again, long term, everything does look fine as of now. And yeah, there's going to be more into this video of just my overall mindset on the crypto space, what I'm doing, where my mind is, and where I think your mind should be. So with all that being said, let's get into it and start off by talking about, again, Bitcoin dominance is right where it was yesterday. There's really no change at all. We need that change to happen. It should happen in the coming months. If it doesn't, oh well, right? You have to be prepared for every scenario. That's what this video is going to kind of talk about, as well as like the one crypto that if you actually want to be in crypto for a very long time, the only crypto you should own. So that's kind of what we're going to talk about today. Not so much altcoins, more so because like there's a certain extent I can talk about specific altcoins. There's some more on my radar that I could talk about. But as of now, we're simply just going to go over a couple of these topics just for those who are newer to crypto, as well as those who might just need a refresher. So again, that's going to take place the rest of this video today. And let's get into it with the first thing being, and this is just a rule that I've set for myself as well. Please, please, please do not invest any amount of money that you would not be comfortable losing. So the more, I guess, the overall arching point is just to not invest more than you have, right? Or more than you'd be comfortable losing. So let's say you have 10K saved, you want to invest in the crypto market. If you're comfortable with losing 1,000 of that 10K, then go for it. But if you're not comfortable losing 2,000 of that 10K, then don't. A lot of people will invest an amount of money that's pretty significant because they expect very big things, very short term. And then that money that they put forth ultimately goes to zero in some cases, or goes down like 50, 100%, which would be zero. But the point is, it goes down a very decent amount. They sell, and now they are very, very upset because, well, they had lost money that they weren't comfortable losing. And so at the end of the day, trading with your emotions is very bad. And so then investing with money that you're not comfortable losing essentially means you are trading with emotional money. So you don't want to be trading with emotional money, because times like this, if you're trading with emotional money, you're ultimately going to be exiting out of the markets. I mean, that's what I'm seeing so many people who are trading emotionally doing. They get so concerned with what's happening in a week's time, or even 2 weeks time, a month, where they don't zoom out and see the overarching picture. Because again, they are very tied to their money emotionally. And so what ends up happening is they have these get rich quick promises, and they ultimately exit and they fail. This is what happens to 90% of crypto investors. Hence why I'm talking about this video. And again, it seems common sense, though it is a very big problem that happens to a lot of people. And I see so many inexperienced investors who will look at a day's price action and consider that to be bearish, again, not looking out on the big picture. Like me, for example, I've told people to invest and to see very big returns in 5 months, of course, assuming we see an alt season in spring, and they will, of course, dude, what's going on with this project? It's down 20% today, or et cetera, when literally no one ever just looks at the big picture. I have to consistently reassure people why, like, just over some simple things about looking at the big picture. And so that's what I'm just trying to convey. A lot of people, again, like, this is why you should always be 100% sure in what you're investing in. Because again, if you're promised great things from someone, and this is why you should never trust or never just blindly follow anyone in investing. But the thing is, if, for example, you follow someone's advice, you never do your own research on things, you invest in that project, know nothing about it, well, you are emotionally investing in that project because you're promised great things, you start to get excited, you invest in that project with no idea, no logic behind why this is a good project to invest in, and then the project dumps, and then you decide to exit because you have no idea what the project is, so you're assuming it's a bad flag. That is ultimately what happens 90% of the time as well. People just blindly following others, which works until it doesn't, right? So you have to do your own due diligence as well, which I see a lot of people not doing, because then you're not having strong convictions because you have no idea what the project is yourself, if that makes sense. You have to build up those strong convictions yourself in order to see what projects would actually fit your methodologies and logic. So that's another important point to talk about, because I feel like no one talks about that either. But these seem just common sense things, but again, it impacts so many people because I see this happen all of the time. I have strong conviction plays that I would be 100% fine holding till spring, regardless of where they are, because A, it's money that I would really care less if I lose. B, these are projects that I myself have done the research on and see strong conviction with. And C, historically looking at data and logic, I see that there's a very good chance that we could see history repeat itself, as markets are emotionally and psychologically driven. And let me explain what I mean by that too. So we're kind of just explaining the overall dynamic of the crypto market and ultimately just the stock market as well. Now you have to think of this in traders who do futures, traders who do perpetuals, which are basically the same thing, but also spot traders. What drives markets? A lot of people think, oh, news. Well, of course, news is something that does drive markets. Well, why does news draw markets? Well, here's the thing. If there's good news on, let's say, a company like Tesla, if Tesla has very good news on the company itself, well, then investors will start to buy Tesla as they anticipate that news really doing the price some justice. So maybe a 10, 20% increase on the day just from that good news. Well, the reason that happens is because people expect the price to go up due to the news. They buy in, which does then drive the price up. That is ultimately what happens. And why these cycles work is because every 4 years, if you're expecting the same thing to happen, well, consumers and investors will do the things that it requires for the event to happen. For example, in an alt season, what will investors do? They will start to buy up alts that they see who credible people have high convictions in, so they'll buy alts, which will then drive the prices up. If, let's say, they dip, they expect this to just be a normal road to the path, they will not sell. It's all psychologically driven, and that is another important thing to understand. If you can understand that all of these markets are literally just emotions and psychology, if you can just approach it with logic, understanding other people's emotions, leaving your own emotions out of it, you will see yourself succeed 99% more than other people, simply off that facet of information. So again, once you start understanding that realistically emotions will drive markets, psychology drives markets, that will give you another edge. So those are a couple of things that I think are just very important to keep note of. But then again, with crypto as a whole, I don't personally think that you should have everything in crypto. I'm just going to be 100% honest in that regard. Almost all of my net worth in crypto right now. And so it may seem contradictory for me to be saying that, but I'm also in a very good space right now. I'm in college. I'm a freshman, right? I'm in a very good position. Well, someone who's maybe in their 30s, late 20s, who might be at a rocky start with their financial future, allocating some of your assets, or allocating some of your money into assets such as stocks, such as a Roth IRA, is definitely another option that I would recommend doing while having your hand in crypto. With that money that you'd be fine losing. Therefore, if crypto goes to zero, you have your stocks, your Roth IRA to kind of fall back on to slowly build your wealth. I don't think you should do a guns-ho approach to either. I think you should have a balance, because at the end of the day, balance is going to be what protects you 100% of the time. Because let's say stocks and a Roth IRA become irrelevant, right? But you have your hand in crypto starts doing phenomenally. Well, then of course, who cares, because you had your hand in crypto early on, crypto pumps, etc. So that's another tip. Diversify. Diversify is going to protect yourself in the best way possible. Yeah, so I really just want to reiterate that none of this is financial advice again, but it's important to understand each piece of information I just said. I know I don't think a lot of people are actually going to watch this video just because it sounds boring. But I think there's a lot of value in it, and that's ultimately what these videos are about. So kind of a step back from the altcoins, just some general thoughts of my own on investing strategies and other talk. But then the last part we're going to be talking about is the only crypto I believe anyone should own. If you're owning or planning to own crypto for 10, 20 years down the road, that of course is Bitcoin. I don't see Bitcoin going anywhere so long as we have technology and the internet. Bitcoin, ultimately, with institutions funding into Bitcoin, you have governments funding into Bitcoin. It would be dumb to be bearish on the long-term utility of Bitcoin. Therefore, I believe Bitcoin is definitely going to be around for a long, long time. As long as we don't break out into World War III, nukes, all that fun jazz. As long as none of that happens, we'll be okay. But again, that is where I see things going. If I had to bet, literally, when I plan to exit, I probably won't be in crypto for a while. I'll probably have my hand in Bitcoin just because of the reasons I just mentioned. But also, I will then diversify. I might even buy my first property. So again, it's important to do things like that and not just be so gung-ho on crypto's the only way, let's bet my entire house on it, because that's what's going to get you wrecked. And so again, let me know if this added any value to you guys. I really hope it did. I feel like this is the video that might really add the most value if you consider everything I said. But again, I'd love to hear your own opinions as well as tips and tricks down in the description below. It'll be fantastic to hear. And with all that being said, I'll see you guys later.